So this is the multi-step income statement problem as an example. And what we're going to do here is we're going to take this information and create an income statement. I don't think the retained earnings at the beginning of the year is going to be very useful. The things that are useful are sales revenue, selling and administrative expenses. This extraordinary item, that's going to go down at the bottom of the income statement. Cash dividends declared are not relevant to the income statement. They're not an expense. We don't put them on the income statement. We will, however, use cost of goods sold. This gain from computation error in a prior year, we're doing 2013. This was 2011. So that's a prior period adjustment. That's irrelevant in 2013. The things that do matter are other revenue and other expenses. We have a 30% tax rate and 80,000 shares of common stock throughout the year. So let's get started. The first thing we're going to do is we're going to put down the heading. And you're kind of crazy if you're not going to put down the heading. So we'll put down FAR Company, because you always get some points for that. If you don't put it down, you get docked for it. This is going to be the income statement. Sorry. And this is going to be for the year ended December 31, 2013. The first thing we're going to list is sales. You could say net sales, but it doesn't really say that, so we'll just use sales. Sales implies net sales on the income statement. We'll put 1,400,000 less cost of goods sold. And that cost of goods sold is going to be the 830,000. Since we show less, the word less over here, we do not put it in parentheses. You do one or the other, but not both. The difference here is going to be called gross profit. And 1,400,000 minus 800 would be 600, minus another 30 is 570,000. So we use 570,000 as our gross profit, less selling and administrative expenses. That's 240,000. Again, we use the word less here, so we're not going to put it in parentheses, equals, some would say it's operating income, 330,000. Again, we're going to use a dollar sign since there's a line above it. And we'll put in here other income and expense, other revenue. And here we're going to come over to the left and we're going to put in 120,000. And then I'll say other expenses. These are not related to operations. Now I'm going to use a parentheses here. Since we don't have the word less over on the left here, there is no less written there. We're going to put a line underneath this, and net other income, because it's positive, 20,000. This is going to be income from continuing operations before tax. And that'll be, maybe we need to put an extra line in there. $350,000. The total of the, need an extra space in there. Less income tax expense. And that's going to be 30% as given up above. 10% would be 35, 20 would be 70, 30 would be 105,000. And again, since we have used the word less over here, we do not put parentheses here. And that's going to be income from continuing operations. And we use the term income from continuing operations if there is going to be something below that. Like in this case, there's going to be an extraordinary loss. And we say extraordinary less extraordinary loss from hurricane net of, and here we have a 30% tax savings on 270,000. So we're going to say 81,000 tax savings. So the net loss, 270 minus 81, is going to be 189,000. And if we use the word less, which I have, we do not put that in parentheses. And so we'll put that over here. And that's going to give us net income. And net income is going to be 56,000. And we'll put a double underline under that if I knew how. But I don't know how. I'm just going to tell you that it should be a double underline. Now the other part of it is we need to do earnings per share. I'll leave that underlined since it's a caption. And we're going to start with these. We're going to put these three lines are going to be down here. So I'm going to copy and paste it there. Income from continuing operations is going to be the 245,000, that number, divided by 80,000 shares, or $3.06 per share. The extraordinary loss, well, it's going to be 189,000 divided by 80,000 shares, or $2.36. And again, we have that less over on the left, so I don't need to do it again. And then finally, the difference is going to be 70 cents per share. And now we have a completed income statement, multi-step income statement for our company. And we can go with that.